All right. Hello. Good morning, everyone. Yeah, you can hop on the call right now so that we can go live. We are live. Let's go. Let's hop on the call so that we can. All right. We are live. Let's hop on the call. Yeah. Like I said, I'm going to be sharing some few things this morning. It has become necessary that I share some tips because I discovered from my followers and those that are trading in my team, many people don't know what they are doing. It's quite important. Many people don't know what they are doing. So it has become necessary that I share these few things to enable you know exactly what you are doing. That's why I want to um, look at market structure, and then from that to be able to look at how to execute your trades, because that's the major thing you want to do to the market structure, then how you can execute your trade. So while we wait for others to join, it's a live broadcast, so you are going to have access to the video on the channel. All right, so let me start again by saying the market is structured to work in a particular way. It's an algorithm. So there's a structure in which is followed. So understanding the structure in which the pattern it follows will help you a lot. I've seen so many samples, markups, and all of that, but they don't really follow the pattern. So it becomes important that we know the pattern in which the market follows. So let me start by um, talking of market structure before I share my screen. I'll talk about market structure today. Then I'll talk about how you can get the best entry. And for those of you that in the mentorship team have had this course with us, where I taught us how to navigate your time frames, higher time frame buyers, then how to get an entry on the smaller time frame. I've also taught about on this channel the 1, 2, 3 trading principles, stating the components that are needed for you to get a perfect trade markup. So if you have not watched those videos, I'm going to be linking the videos in the description so that you can gain access to it. So let's go ahead, call in your friends and everyone. Let's go. Let me share my screen now so that you can see my screen. Okay, you can see my screen now. I want to look at market structure made simple, how we can get perfect entries on market structure. So let's see how it is. Okay, so let me start by, I wouldn't want to start defining market structure because we don't have all the time. We have videos already on that, which will be important for you to just watch We have the um, bullish when price keeps making series of higher highs, higher lows. This is the bullish formation. Price keeps giving you series of higher highs, higher lows. This is a bullish formation. So you're going to discover that price is giving you a high, a higher low, a higher high, and a higher low. Then price gives you a higher high. This is a bullish formation. Yeah, this is a bullish formation. So when price gives you this bullish formation, you are expected to take an entry only when price comes down to the higher low. Giving you this formation that will enable you to take entries only at the higher low. You're expected to take an entry only when price comes down to the higher low. Then you can consider all of these as your take profit. All of this becomes your point for take profit. Then when price comes down, gives you another higher low, you want to take an entry from this higher low. So price comes and trade into this higher low to give you a higher high. So this becomes your take profit. This last recent higher high that was broken becomes your take profit. This is a bullish formation. And in a bearish formation, it gives you the same thing. When price is coming down in this order, price gives you a high, a lower low, lower high, lower low, lower high, lower low. You are going to want to look for only selling opportunity. So when price comes to this last lower high, then you can enter to take profit. You can enter from this point, all of these, to take profit at the last lower high. Price come back to this lower high, you get an entry from here and you take profit at this last lower low. So that's just that. While in the consolidation phase, price is simply generating liquidity to both sides. Sometimes can generate liquidity to the bearish side, it can generate liquidity or create liquidity to the bullish side. So you have maybe something like this, price moving within a channel, or it's moving within support and resistance. You know, it going just within a channel. So price tends to build up liquidity to be taken and then comes back, retest here, come take the down liquidity, and then price moves away. So in this kind of formation, price is trading either within a channel or within support and resistance. So this is what we refer to, or in generally we refer to as the consolidation market. Price tends to stay within a channel. There's sometimes price gives you something like this, and then price tend to give you something like this in a channel. You see it's just coming, it's trading within a channel, and just keep giving you something like this. Is generating liquidity to both sides. So the next one can come, clear this, come back, and then come clear the lows. So this is the different pattern of market structure that we have. We have a lot of videos on this channel that will help you understand market structure better. A lot of videos on this channel. We looked at part one, part two. We also looked at liquidity, all in this channel. So you can look for them, and you would want to do well to plug in. All right, so what I want to teach today, I want to talk about how to execute your trades properly. How to execute your trades. I've spoken in all of the videos that when you want to execute your trades, there are these components is what helps us to execute our trade perfectly. So I'm going to write out these components so that you can we'll see how we can make use of them. Okay, components. First of all, the components used in the Smart Traders Network is number one, structure. A structure. After that, we have our range. We have our liquidity. We have our bank levels. Then we have our fee for extra confirmation. These are what we let me call the fib levels. We've taught this over and over again. Over and over again on this channel, you will find them all on this channel. So first, you want to consider the structure. Like I said when I started, you want to, is the structure bullish? You want to wait for price to trade down to a discount zone, then you want to get in on the discount zone. I've taught how to get the discount zone in my previous channels. So in my previous video, you can just pick out your gang tool, measure this, and the 50% of all of this, or you take 50% of the entire move. So if I take my fib level from the low to the high, this is 50%. So once price come below 50%, that is your discount zone. You can get an entry from there. So price is coming in this channel, let's say here. Then you want to get an entry here to go higher. Then when it creates the new high, you look for the range, you get an entry on the next lower high, on the next higher low rather. It gives you a higher high, it comes back for a higher low. So this is in a bullish formation. So how do you spot the entry? Because you are not going to, it's not advisable for us in the Smart Traders Network want to get a minimal stop loss, minimal risk for a higher reward, because that's the essence of trading. That you're able to get something out of your trade, minimal risk, higher reward. When we spoke about that in our risk management video, you still find it in this description, the description page of this video, you find it there. So now when you have price approaching your higher time frame point of interest, so here now becomes your higher time frame point of interest. This lower, this higher low is your point of interest. As price is coming to this place, what are you expecting? If you remember when I talked about the 1, 2, 3 trading principle, I said you have first liquidity sweep, a break of structure, and then a retest. That's what you'll be expecting. First is your liquidity sweep. Price will give you liquidity sweep. We create the liquidity and sweep it. Early buyers will be taken out of the market. So price creates this low, comes and blow this low off, then goes to break this high. So this is first one, liquidity sweep. Two, break a market structure and then the retest. This is what you'll be expecting when price comes back here. When price comes back to all of these point of interest, the higher low, before price gives you a higher high, this is what you're expecting. So structurally, we are bullish. The next thing to look at is your range. What's the trading range? The last low that was created, the last low that was created, and then the last high that price was coming from. This is the last high. That's your range. Then liquidity. There is going to always be liquidity before this entry. So you have to wait for this formation. This is my formation that I'm going to wait for when price comes to this point. You wait for this formation before you can get an entry. Price comes, break, goes up, and then come for the retest, and you can get an entry. So all of these, when we talk about lower time frame entry, find how to get that entry from here. I can either take the measurement of this place and then I'll just play 50%. So price most likely will come to the 50% and go up. So if there is liquidity has been taken, the next thing you want to look at for is your bank. By banks, sorry, let me correct that. By bank, I'm talking about by banks, I'm talking about your institutional cube, either in form of a mitigation candle, in form of an order block, or institutional candle in form of an IPA, a fair value gap. So one of these three things are our bank levels for entry. Institutional candle in form of mitigation candle or a smart money cube, or institutional candle in form of a fair value gap, or institutional candle in form of an institutional candle, the bank. This is what is, then you can set your entry within that place and then you can go up. Where do you want to take profit? At this high. This high. This becomes your high because this becomes external liquidity when you are in a bullish momentum. The high becomes your point for target. So assuming you are targeting this high, this is the entry. What I want to really explain today so that you understand it. Price gives you this high, gives you this low, gives this high, and then now price comes to give you, let's say, this low. So just look at this. You have your high, your low. The first thing you know is we are still bullish. So you want to follow our trading component. So following our trading component, I said number one is your structure. Identify the trend of the market is bullish. Now price has come. Next thing to do is to identify your trading range, which is the last structural point, the last low, and then the last high. You get your last structural point, the last low, and the last high. The next is your liquidity. You come here to get an entry. So let's say price comes here and give you this formation. This is our formation. We always be within this place. Now you get that formation within this place. You can see that sweep of liquidity around this place. Price swept that little lows. Then price gave us the break of structure we're anticipating to get an entry, and then we got the entry from here. Price gave us that break of structure, then we got the entry from here. Now, where is your target? This is your target. Now, don't not expect, please take note of this. Don't expect that price is going to just go and blast this. No. The price is bullish, so it's going to see keep giving you that formation of a bullish move. It will give you the formation of a bullish move. On the lower time frame, you might see it just a single move up, but on the lower time frame, you find it giving you all of this move. It will keep giving you all of this bullish formation. So it gives you something like this, gives you something like this. This is a typical price movement. And then price gives you something like this. Sorry. I want this. This is typical price movement. Price gives you this. Okay, price give you this movement. Now, this is your external liquidity, which is your target. Price has not cleared it, and then price break structure within your range. Price gives you a break of structure to the downside within your trading range. Remember, structure is still bullish. Trading range is still intact. The high, which is your external liquidity, has not been captured. Now, this is the high. Maybe I should annotate on that so that you'll be able to see it. This is the range. Let me put it range high. Range high. That's the range high. And this is your range low. Your range low. Now, the range high in the bullish formation has not been broken. Price gives you something like this. Majority of us will be waiting for price to come back into this place, and then we sell down. It doesn't happen. This is wrong. The high has not been taken. And you cannot expect this to be a break of structure until either this is taken out or this is taken out. Until this text is taken out, the low is taken out, that's when you want to start looking for this formation to go down. So long the low has not been taken out, once you see this formation, you should be expecting to get in for another buy. You see this formation. Remember that there is still a low here that has not been captured. There's a low. This was a high. This was a low. So price comes and give you this movement here. What you should be expecting rather than looking for a sell from this place is to look for another formation of that same movement, the bearish formation, the bullish formation rather, is what you should look for to now capture the high. So instead of looking to sell down, why not just look for the same formation within this place to go up? So this is how to execute your trade. This becomes your first entry. Let's assume you miss the first entry. You miss the first entry. Then you should take that as your second entry. This becomes your second entry. You get it now? So you are not going to wait and say, okay, let me just, this is first entry. This is first entry. Then this becomes your second entry. The same formation. Price comes, gives you, you are not violating structure. You are still trading structure. So you want to wait for price to give you this same formation for a buy continuation. For a buy continuation. So you want to wait for something like this to happen, to play out. Then you get in on the retest. You get in. I do hope you are understanding what I'm trying to communicate. The video is going to be available there. You can download it and watch it over and over again so that you will get the picture of what I'm saying. So you want to have this go on. You keep trading until you keep adding positions until you take the external liquidity. Now, in a bullish formation, is the same thing. Price is coming from this high, gives you this low. Then you get that formation here. 1, 2, 3 structure is broken after liquidity has been taken, and the price comes and come back for a reaction to get an entry. So you have price trade like this, trade higher, and then comes to break. Once it breaks, just wait for the retest to go down. So price comes, give you a sweep of liquidity around that zone. Price sweeps that low that was created, and then that move comes to break structure, breaks the previous high. So once the high has been broken, then you can just look to get an entry. So you get an entry from this place, you get an entry from here, then you can go down. All right, let me just one progress. So you want to ensure you keep adding position. I'm going to take you to the chart so that it's not just going to be just talk and talk and talk. You want to ensure you add positions rather than looking to sell. Just keep adding positions. Once you get your structure, your range, your liquidity, the bank levels where to get in, either an institutional candle you are getting, you can keep going down until this external liquidity is taken, which is now your range low. This is your range high, high, low. This is a lower high, so we should head for a lower low. So once price gives you this bullish formation, it is not a break of structure to expect to take. Maybe you want to now wait for a retest around here. No, you can't wait for a retest to go up. We are still bearish, so you want to wait for price to give you the bearish formation, around this zone. So long it's still within structure. Once you see another bearish formation, just engage the sell, and then we can go down. So I think I will let's go to the chart so that I have other things I want to show us, but let's go to the chart first. This is VIX 25. I, I love this asset. I've been trading it and trading it back to back. So I also like to use it to give us an example because it gives you a perfect of what has been happening. So our Telegram channel for a long time. So I can let me hide all the markups. Okay, let me just hide that. Okay. So we know we've been bullish on the daily. You can see how daily has been coming up. Now, what was our trading range? We know we are bearish on the higher time frame. Following structure, we are bearish. We've analyzed this trade over and over again, like over and over again. We've had multiple examples, and we caught multiple entries on this singular asset. So this is my top range, this last high, and this is my down range, the low. Sorry, let me put it at the low. Okay. So since we are bullish on this retracement, we're supposed to have an entry around this place to go down. This is what I'm still expecting. I'm still expecting price to come here, then we sell down since we are bearish on the weekly and daily is retracing. So we'll keep adding buy positions till we get to this point of interest. It's the same thing. You can see the movement of price. Price gave us this. This has been the movement of price for long. lower high, higher high, rather higher low. Another higher high was created, a higher low, higher high. Yes, higher high here, higher low. Price keeps giving us all of these. A higher low has been created now, so we should have a higher high. Price keeps giving us all of these movements. So I'll go to maybe H4, the 4 hours time frame, so that we see what price has been doing on the retracement leg, which is bullish. So price has been bullish. We know price has been bullish. But what can you find from here? When price came here, price broke down. So we are still bullish. Many people expecting that price should come back for a retest at this zone, and then we go lower. While position, take sell this, you ought to be looking to buy. Should ought to be looking for a buy within this zone, which price gave us beautifully. Price gave us that break of structure. Let me zoom it out so that you see. Price gave us that break of structure. You can see that break of structure here. And price gave us the retest. At where? At a fair value gap that was here. You can see how price came into that fair value gap, and then price started pushing up. So this would have been your entry. Price broke this high, came back. There was a fair value gap here. If you go to the 1 hour, there was a fair value gap here that price traded back into. Let's see if we can have that. Data is quite long. We can have that data, then I think I can show us. It's quite funny. So, all right, I was right because I've been trading this asset. You can see how price came back into the fair value gap that was here, and price gave us a distribution. Price left. Lower time frame confirmation was here, and then price left. What was the target? Here would have been the target on the day, on the 4 hours. You got an entry from here. Here would have been your external liquidity because this was now your trading range. The high, the last high that was created, and then the low would have been the target on the 4 hours, the low. So you got from the low, you are taking target from the high. Now, before price got to this high, watch what happened. This is the 4 hours. Let me go back to the 4 hours so that we can have the full details on a singular screen. Yes, this was the 4 hours. Before price got to this zone, we've gotten 1 and 2 entries from here. Before price got to this zone, what can you find? Price gave us another break of structure. Just the sample of what I showed you. Price has broken down. So instead of waiting to sell from here, you should be looking for another buy entry here. So coming to this place, all of these after the break of structure, price gave an entry here. Let me see if I'll get that on. I can get the 30 minutes or 5 minutes entry. You can fetch that data. Let's see. Okay, data is available. Yeah, it's available. So this was it. Price came in there, and you can see the break. You can see how price broke this structure, and then price gave us an entry from here. This was the entry. Price ensure it came back to mitigate this point after breaking high, low, high. There was a break of structure here on 5 minutes. I'm sure there was a 5 minutes break here that I've gotten an entry from this fair value gap. Yes. If you go to 5 minutes, there was an imbalance here, you'd have gotten an entry. So let's say you had this play, you got this one, this was the break of structure you saw. Price was going to come back. Price came to all of this. There was a fair value gap around this zone. That's where price came to tap. That was the fair value gap price came into. Institutional candle in form of a fair value gap. So let's go to H4. That was the third entry that you would have taken. That was the third entry. That was the third entry. And then that was the entry that now came and captured the external liquidity that was here. That was the entry that captured the external liquidity. Now, what is the next trading range? This was the last low. This is the last high. Last low, last high. So this was the last trading range. The range high, and here becomes the range low. This was the last entry. So we're expecting that price will come back to all of this. Price didn't go that far, but what did price do? Price gave us a break of structure here and broke down, came back. So you can term this. This was the breakdown. Immediately price broke down. So long I know we are bullish, we want to start looking for bullish formation around this place. If you go to lower time frame, there was a formation here. Price came on the bullish formation, a high, a low. Price closed above this high, and price needed to come back to the imbalance to mitigate out of the. This is what it takes to trade smartly. So price, you got an entry from here, and price came, captured the high, which was your take profit as external liquidity. When price broke, price gave us, this was now the high. Talking about the trading range now, this became the new trading range. So we expect that price will come down, give us an entry here. Did price do that? Yes. After price gave us this high, price traded down, traded up. Price didn't break above here. Did price do that? Let me see. Okay, price came. Yeah, price wicked that away, and then we price didn't come back to this place. Price just came. There should be an imbalance here that this week came into, and price went up. Immediately I saw this break of structure. I saw this break of structure. This is a break of structure. Immediately I saw this one. I knew that any other buy opportunity that this place present, I was going to take it. So going to the 15 minutes, price gave us a move, a formation on this place. And then we got him on the formation. Let's see. You can see that formation. Price gave us, you can see that formation here. That was the formation. Price swept liquidity, broke structure above, and then there was an imbalance here that price was going to come into. You see how price tapped into the imbalance. Price just tapped into the imbalance. This was the last entry I think I uploaded today or yesterday. Price tapped into this imbalance, then we left. This was the first imbalance. Price closed above this. Then immediately price closed above this. There was another imbalance here. You didn't catch this. This was another beautiful imbalance here. That was where price came into. Yeah, price came into that imbalance, and then price gave a very sweet move. I think this is over 1 to 14. One of my position is still on. It's still on this. This is about 1 to 10, if I'm not mistaken. So it's just the same principle. That's the principle. That's how I take my entries. Yeah, this is 1 to 8. Okay, 1 to 8. 1 to 8. Now, what am I expecting? I'm expecting that price should come into the imbalance on the 4 hours. So you keep adding, you just want to look for only buy entries until there's a clear break of structure. So if you check, There was a break here that I'm expecting, but price has not come to this other block. So there's a possibility price is going to, you can see some form of double top here. You can see double top here. Yeah, there's some form of double top equal highs in that zone, which tells me that price is going to come and clear this off. There's an imbalance here. Price may react there, but that does not invalidate the fact that we're still bullish on the daily. On the daily, we're still going higher. So I want to see price come into all of this zone. That's what I'm expecting. Price should come to all of this zone and then we can start going down. So that's just how basically you should trade. That's how basically I trade. You want to take trades on the structure, keep trading the structure. Yes, you keep trading it until you are able to. Yeah, yeah, I saw you. Thank you. Let me. Okay. Thanks for hopping on, farms. Thank you so much. So you have your questions. You can have drop your questions there. I'll be able to see them. Yes, just drop your questions in the comments section. I'm watching them. Mrs. Folashade, good afternoon. You are cited. Thank you so much for joining the call. So you want to ensure you keep following the structure until the structure breaks. Keep adding position. Keep adding position until it breaks. If it has not broken, just keep adding position. That's what structure is. You are trading the structure. You want to make sure you keep trading until you get to your point of interest. So price, I want to see price go down. My network is to okay. I think my network is breaking. But you have your questions, you can just let me know in the comment section. I will attend to them. Oh, from Pakistan, you're welcome. We have a Telegram channel where we analyze trades together and we drop entries. That's our signal group. We have a Telegram channel, the Smart Traders Network, where we analyze trades, we drop entries so that everybody can partake of the trade. So that's what we do. Yeah, that's what we do. So if you want, I think I'll drop the link maybe in the comment section. Let me see if I can just send you the link while the call is on. So this is for the 25. I'm expecting formation within the imbalance I just showed us. I'm going to take it. I'm going to take it simply because this is already a break of is a break in market structure that I can see here on the 4 hours. So if this one holds, is my break in market structure. If it holds, then I think I'm going to take myself from here. But you want to wait for that formation to happen. Price will give you the same formation, a sweep of liquidity, and then a close above the previous structural point, and then we now want to start going down. So this is the formation for this. Ensure you wait for that formation. Price will come and give you the formation. You must always look out for this formation on any time frame. Any time frame before you take your trades. It reduces your risk and it gives you a clear picture. Okay, let me. I'll be dropping the link right now. The link to the Telegram channel. I'll drop it there so that you can just hop on and anytime Let's have your questions. We can attend to them from there. Just give me 1 minute, please. Let me copy and share. All right, let me copy and share, please. Just 1 minute, 1 minute. Okay, I'm posting in the comment section. You can just join it from there. We analyze trades, we drop them in the Telegram channel, then we can take them together. That being said, I want to look at maybe one more asset, and then the video will be there so that you can watch it. I'm also recording it. I'll make it downloadable so that everybody can download it and go through it. If you have any asset you want us to look at, why not just drop it in the comment section. Let's look at it. You have asset you want us to look at, drop it in the comment section. Let's touch on it. Yeah, in the Telegram group we discussed about Crash 300, but we didn't keep an eye on it, so it left. It left without picking us. Crash 300. Discuss Crash 300. That's what we talk about. Focus most times. And joining from Ghana, you're welcome. Ibrahim Adamu, welcome. You're cited. Thank you for hopping on. You have questions, drop them in the comment section. I'll just see them and attend to them. So let's look at Crash 300. Let's take another example. We discussed this in the former call, one of the calls we had about 2 weeks ago. And when price came, we didn't keep an eye on it. And price left. I wasn't happy because I was expecting to lose asset. Yeah, I was expecting it. That's why we talk about focus all the time. Focus on few assets, you catch the entry. So price has been bullish on this retracement move. Weekly, we are bearish. You can see high, low, high, low. We are bearish on the weekly, but on the daily, price is retracing. So since price is retracing on the daily, price gave us this high, give us this low, give us this high, give us this low. Price give us a higher high. So we saw all of that movement, and we're expecting that to make good use of that movement. But behold, price left us. Price left without us. But price is going to come back. Yeah, price will come back. By structure, then this was the last high. So now the trading range, high range, and the low range. So we have the low and the high range. There was an imbalance here, which tells us that price is going to come back to the imbalance. Yes, we mark that imbalance out. We know price is going to come back to the imbalance. Smart money will come back to mitigate out of their position. Price can close the imbalance beautifully, and price left. Now let's go to the 1 hour. Let's see if we would have been able to get an entry on the 1 hour. I've gotten an entry on the 1 hour. Okay, this is 1 hour. Look at what price did when price came to that zone. Look at what price did. Price gave us a high. It was so beautiful. A high, a low, a high, a low, a high, a low, a high, a low, and price broke above. So that was the play on the 1 hour. That was the play on the 1 hour. So price came and gave us that beautiful play on the 1 hour. When price gave us that play on the 1 hour, we're expecting that price should come back. When price gave us all of this break, price should come back. But when price came back, price came and gave us a uh, equal lows, double bottom. So first entry did it give us up to 1 to 3? Maybe, maybe not. This was first entry on this place. Price didn't give us up to 1 to 3. I don't think so. Price give us, yeah, price give us a 1 to 3. Yeah, price give us a 1 to 3. Let's go to 15 minutes so that you see it clearer. 15 minutes, we will see it clearer. And I want to here. I'll remove all of this so that it be clear. Let me remove this. Okay, this was a 15 minutes. Watch what price did. Price gave a high, a low, a high, a low, a higher high, a lower low, and a higher high. Then price came. While price was going, this was the first move. So price gave us this first break of structure here. That's the first break of structure. So if you had gotten in on this imbalance that was left here, if you had gotten in on that imbalance, you got a 1 to 3. This was the first move, gave you a 1 to 6. Then price came back and swept this as internal liquidity. When price came back, price swept this internal liquidity. High, low, high. Okay, I think this is the break of structure. This is the next break of structure. Now it's giving us this next break of structure, and price is yet to come back for the retest. Price didn't come back for this retest. Price just left. But if you had seen there was a 5 minutes break of structure here, 5 minutes play. See that 5 minutes play? Yes. If you were focusing on this asset, you'd have seen this 5 minutes play, and then you'd have gotten in on this. But that is gone. Let's look at how you would have secured an entry on this. So the next place we should have looked at now is here. It didn't come back here, created a high, created a low, and now price has given us this. So this is what the price should do. Let's go from here. Yes, this should be the next play. Price can decide to go from here because that is the next structural point that price should go into. And you can see all of these um, liquidities here that are lined up here. Price has come and swept some and is not complete. So price should retrace from here and until we clear this high. I'm still bullish on this asset until we clear this high. If price decides to come down and clear this low, that becomes a break of structure to the downside. Then we can look to start selling and looking for shorts to go down. Yeah, that is that for market structure and how you can secure entries, clean entries. Very simple. Just keep following the trend. If price has not broken, if price has not given you a break in market structure, keep trading. Keep adding positions. Price comes and price gives you the play here. Just add position to it. And then let's So long price has not closed above this structural point. This are position to structural. These are structural points until so price closing below this is not a structural point, neither is it a breaking structure. This is just a distribution for a reaccumulation. A distribution for a reaccumulation. So formation. This is the formation we trade in the smart traders network. This is a framework for a break of structure and then a retest. If it happens elsewhere within or while you are on the bullish move, just get in. If it happens while you are on the bearish move, just get in. So it will happen all the time in the chart, all the time, anywhere, whether in a bullish formation or in a bearish formation. This is going to keep happening over and over again. Thank you so much for hopping on the call. I appreciate you. I'll be waiting for you in the Telegram group to attend to your questions and try to respond to every comment that you drop. You have any video you want me to make that will help your trading journey, why not? Just let me know in the comment section of this video or in the Telegram channel. I'll definitely roll out that video for you and I'll make sure I work on it so that the network will be much clearer and then my screen will be much clearer. Thank you, Mr. Approve. Thank you, everyone that hopped on the call. Thank you so much. Reach out to me. You need any further help, why not? We'll be here to attend to it. Peace out.